Yo guys, this Wednesday, December 10th at 2 p.m. Eastern. Mark your calendars, set your alarms. The Fed is dropping its final decision of the year, and the clock is ticking. Right now, the market is hyping this up like a party. Everyone is betting on a rate cut. But I just finished digging through the fresh Black Friday data, and I gotta tell you, we are completely missing the point. Let's look at the evidence. The media is screaming that online spending hit $11.8 billion, an all-time high. Sounds like the economy is booming, right? So why would Powell need to rush in with a rate cut? Wrong. The devil is in the details. Sure, the amount of money spent went up, but the actual number of items sold dropped by 5%. Do you get what that means? We didn't buy more gifts for our families. We were just forced to pay higher prices for less stuff. That's not a booming economy. That is just sticky inflation wearing a Santa hat. It gets scarier. Where did that money come from if things are so expensive? Data shows buy now, pay later usage exploded by 30% this year. This is the ghost story I'm talking about. The American consumer is tapped out. We are literally leveraging our 2026 paychecks just to survive Christmas 2025. The Fed economists aren't stupid. They see this internal data too. They know that if they don't cut rates this week, this tower of consumption built entirely on debt is going to collapse. So back to this Wednesday. I'm calling it now. This is a forced cut, and this is where you need to be careful. The market might initially treat this as good news. You might see a Santa rally pop on the charts. But don't get tricked. The logic behind this cut is consumer weakness. History tells us that when the Fed starts cutting because the economy is cracking, that is usually the most dangerous time to be in the stock market. Here is the timeline you need to watch. Right now, we are in the party phase. The dopamine hit of spending. But come January, 3 things happen at once. 1, the credit card bills arrive. 2, the seasonal workers get laid off. 3, companies admit in their earnings calls that Q1 guidance is trash. This is called the holiday hangover, and it's going to hurt. Bottom line, the Black Friday numbers were fake, but the debt crisis is real. The Fed's move this Wednesday is a desperate attempt to stop a hard landing early next year. If the market pumps on Wednesday, mark my words, don't chase the FOMO. That's the exit liquidity trap. Protect your capital. I'm Alex. Smash that like button so the algorithm spreads the truth before the Fed speaks. Catch you at the FOMC meeting.